Trump strikes deal on trade and critical minerals as Southeast Asia. Italy's tax evasion reaches 102.5 billion euros in 2022. And GCC economies expand by 3% during the first quarter of 2025. Welcome to the Economic Bulletin. We start off with the ASEAN Summit, where European Council President Antonio Costa has announced that senior Chinese officials will visit Brussels in the coming weeks to discuss Beijing's export restrictions on rare earths. Costa voiced concern over China's recent export controls on critical raw materials and broader trade relations. He added that the EU aims to finalize trade agreements with Malaysia, Thailand and the Philippines soon, following his meeting with ASEAN leaders in Kuala Lumpur. Chinese Premier Li Qiang has called for strengthening the regional comprehensive economic partnership against a backdrop of rising global protectionism. Li urged members to expand market access and accelerate the trade bloc's enlargement, including supporting Hong Kong's accession. Li emphasized that the pact has been crucial for regional growth despite weak global economic momentum. He advocated for upgrades to the agreement, especially in digital and green sectors, while reaffirming China's commitment to the ASEAN's central role in the regional architecture. The United States has signed multiple trade and critical minerals agreements with 4 Southeast Asian nations to address trade imbalances and diversify supply chains amid China's tighter rare earth export curbs. President Donald Trump concluded reciprocal trade deals with Malaysia and Cambodia and a framework pact with Thailand to reduce tariff barriers. A similar framework was reached with Vietnam, which faces a 20% U.S. export tariff. Trump also signed separate agreements with Thailand and Malaysia to aim to boost cooperation on critical minerals. Malaysia pledged not to restrict rare earth exports to the U.S., while $5.4 billion in annual energy imports.
Peace Accords. Once again, want to congratulate
Canadian Prime Minister Mark Carney has announced that the country has begun talks on a new free trade deal with the Philippines. He also agreed with ASEAN leaders to accelerate progress on a Canada-ASEAN deal with the aim of finalizing an agreement by next year. Carney noted that Ottawa is also exploring opportunities with Malaysia's Petronas to strengthen Canada's role as a reliable energy supplier.
We had made progress to repeat, and we stand by the progress that had been made, the government of Canada.
For further analysis, we're joined from Hong Kong by the geopolitical analyst and PhD researcher at the University of Manchester, Marvin Lee. Thank you, sir, for joining us here on Qnews. Let's start off by asking you, what are the key expectations for the ASEAN summit regarding the meeting between President Trump and President Xi? How might the discussions shape the regional trade dynamics?
Assalamu alaikum. Thanks for having me. From China's viewpoint, the upcoming meeting is a strategic inflection point in a Sino-American and even ASEAN trilingular dynamic. It's expected that both sides, like US and China, will signal a desire to stabilize trade and investment links rather than escalating confrontations about rare earth AI export controls, and even the tariff. For example, recent reporting notes that the US and China saying a trade deal is drawing closer and closer. And for ASEAN, the expectation is a reaffirmation of the central approach. China wants ASEAN to be treated as a bridge rather than a battleground, in line with the Chinese notion of harmony without uniformity. So I can see that there has been a very optimistic signal between China and US during this trade talk. And even at the upcoming summit between President Xi and Mr. Donald Trump.
Well, as you said, that this is a shift when it comes to the Sino-American relations, but also President Trump is making moves and deals with South Asian countries as well. How does this align with his broader economic strategy when it comes to the Indo-Pacific region, and is this a way to somehow buffer things when it comes to China?
So, according to multiple news reports, Trump has signed deals or frameworks with ASEAN nations, especially Malaysia, Cambodia, Thailand, and Vietnam, specifically targeting trades and critical mineral supply chains. And from the Chinese perspective, these moves reflect the US strategy of supply chain diversification and friendshoring, and shifting manufacturing and critical minerals sourcing away from China and into Southeast Asia and other partners. And the US Trade Representative statement emphasized lowering tariff for US export and increasing the market access for these trades. So let me explain this in layman terms in simple English. So both China and USA would like to seek ASEAN countries to their side in order to have a geopolitical and economic leverage just to fight against with each other.
Well, as you said there, it's about a geopolitical leverage to fight each other, but I'm sure that this also somehow benefits the ASEAN economies in general. In what ways could these new trade agreements impact the ASEAN economies, especially when it comes to export growth as well as foreign investments coming into these countries?
Let me give you a very good and recent example first. Jardine, which is one of the largest landowner or developer in Hong Kong. So it is a British-owned real estate company, and they have been selling all the assets from Hong Kong, and in order to increase their economic or business portfolio in Southeast Asia, especially in Malaysia and Indonesia, which means that these companies, these big multinational companies would like to see ASEAN as another economic engine because there has been lots of geopolitical tensions between US and America. So that's why ASEAN economies, especially Malaysia, Thailand, Singapore, they have been gaining a lot when US and China has such a tension with each other in the foreseeable future.
Okay, China has imposed export restrictions on the rare earth minerals. How critical are these minerals for the global supply chains, and what risks do you see when it comes to these restrictions that they could possibly pose on Southeast Asian economies as well as the global markets? Could we see another, chip sort of issue like we've seen in the past when there was a restriction on chips, microchips?
Let me give you a very obvious data first. So in 2024, China export more than 60K metric tons of rare earth magnets with an export value of about around 3 billion USD. And China's has a very unique advantage about like the rare earth refining, and they have been controlling over 90% of the rare earth mining or export to the rest of the world, which means that this REE, which means rare earth elements, are indispensable for high technology device, for example, EV cars, wind turbines, aircraft carriers, like advanced aerospace and defense systems. And from China's vantage, rare earth export are strategic lever in global trade dynamics, applying the concept of using one's opponent's tactics back on them. So that's why China would like to seek peace with the counterpart of the American, but at the same time, China is also ready to have a peace talk and also ready to deal with every pieces of confrontation from other other countries or any hostile move from other countries, especially from the West.
But would this not, I mean, I understand they're countering, US moves, but this would definitely affect the supply chain globally, and it would affect markets in general, not just the US and China.
Yes, that's right. So that's why EU and ASEAN and even Middle East have been investing a lot in REEs, like the rare earth elements as well.
Well, since you brought up the EU, now the European Council President Antonio Costa announced the upcoming talks in Brussels about China's rare earth mineral export limits. How might the EU's involvement influence the global rare earth trade landscape in general?
This is a very good question. From the Chinese perspective, this creates a new axis of competition and cooperation. On one hand, China wants to ensure stability and export markets, like including the EU, of course, for its rare earth products. On the other hand, it regards the EU push for alternative as splitting influence. So, there's a Chinese philosophy here, like vertical and horizontal alliance, which means that China's strategy emphasizes building a web of relationship. ASEAN, EU, and China should ideally form a trade architecture that lessens dominance of any single bloc here. And the EU involvement may compel China to provide more stable export regimes or negotiate technical cooperation, for example, in recycling of rare earths, green mining, that the Japanese and the South Korean have been investing a lot in these alternative alternative technologies.
So how do these trade developments affect the competitive positioning when it comes to South Asian countries, when it comes to global high-tech industries that rely heavily on these rare earth minerals?
This is another very good question here. So we have been witnessing the rise of Chinese EV cars, and all these EV cars, they have a battery here. And even like the iPhone, the MacBook that we are using, this is heavily rely on the Chinese rare earth. And there are some rare earth in Canada, in Greenland, in USA, all around the world. But like when you extract the rare earth from from the ground, it also pollutes. It also creates environmental pollutions here. So that's why China has been playing this card to have a rare earth control against the rest of the world.
What about the policies or the measures that the ASEAN governments could consider to strengthen their economy's resilience in the face of these trade uncertainties, as well as the mineral export restrictions and the trade wars we're seeing in the world right now?
Yes, Southeast Asia can easily benefit from a supply chain like diversification here because from the Western world they have been sharing the so-called China plus one, which means to diversify all the factories to Southeast Asia. So I can see that Southeast Asia has been gaining a lot from these tensions between China and the West. But actually, China has been playing another move to work with ASEAN countries, especially with Malaysia, Singapore, and Thailand, because they are I don't say they are allies, they have a very friendly cooperations in terms of economic cooperations here. So that's why, in the upcoming 2 decades in the future, Southeast Asia will have a very good future because of these geopolitical tensions.
Okay, from Hong Kong, that was a geopolitical analyst and PhD researcher at the University of Manchester, Marvin Lee. Thank you so much for joining us and thank you for your insights. And now we move on to the latest developments from the US. US President Donald Trump has reported that he anticipates naming a replacement by the end of the year, so Powell's term does not expire until May 2026. Additionally, the Treasury Secretary, Scott Bessent, confirmed that the list of candidates to replace the Federal Reserve Chair, Jerome Powell, has been narrowed down to 5, with the winner likely to be named by the end of the year. The Center highlighted that the finalists are current Fed governors Christopher Walder and Michelle Bowman, National Economic Council Director Kevin Hassett, former Governor Kevin Warsh, and BlackRock executive Rick Ryder. Brazil's President Luiz Inácio Lula da Silva stated that discussions with U.S. President Donald Trump had gone well and that recent decisions made by the United States against Brazil were incorrect. According to Lula, Trump had guaranteed that the two countries would reach a deal on trade during a recent meeting between the two leaders. However, he said he would be willing to discuss any issues with Trump and was also willing to help the United States on the issue of Venezuela. For his part, the U.S. President Donald Trump stated that he had a good meeting with the Brazilian President Lula da Silva at the ASEAN summit in Malaysia, who he described as a very vigorous guy, but was uncertain about the prospects for a deal. Moving on to Europe, the German business sentiment improved slightly in October, with the IFO Institute Business Climate Index rising to 88.4 from 87.7 the previous month. The reading slightly exceeded economists' forecasts. IFO President Clemens Fust noted that while the increase was positive, it reflected improved business expectations rather than stronger current conditions. He observed that companies continue to report weak present business performance. Trade body Make UK has reported that British manufacturers are investing the smallest share of their sales in new equipment since 2017. The survey shows manufacturers are directing just 6.8% of the annual turnover towards plant and machinery, down from 8.1% in 2024. The report reveals declining investments across key areas, with research and development spending also falling. Make UK urged the government to streamline tax incentives in the upcoming November budget, noting that nearly 40% of surveyed businesses said tax breaks significantly influenced their investment decisions. Italy's tax evasion reached €102.5 billion in 2022, increasing by €3.5 billion from the previous year and reversing what was previously believed to be a sustained decline. According to a government report, the improvement in tax compliance between 2018 to 2022 was just €5.9 billion, far less than the earlier estimate of €26 billion. The findings come as Prime Minister Giorgia Meloni's government implements controversial policies, including tax amnesties and higher cash payment limits. While Meloni argues past crackdowns were ineffective, critics warned a new approach could worsen Italy's chronic tax evasion problem. In Asia, the Ministry of Commerce has reported that China's wholesale and retail sector grew steadily in the first 9 months of 2025. The sector's added value rose 5.6% year-on-year to 10.5 trillion yuan, accounting for 10.3% of GDP and helping to bolster domestic demand. Profits in key wholesale markets rose 8.2%, driven by the 17.9% surge in industrial consumer goods. Retail sales increased 4.6% year-on-year to 32.5 trillion yuan. Customer traffic and turnover across 78 major pedestrian streets grew 4.3% and 4.4% respectively. Rural e-commerce also expanded, with online retail sales up 7.7% and agricultural products sales growing 9.6%. The Bank of Japan reported that a key gauge of service sector inflation rose for the second consecutive month in September, reinforcing its view that higher labor costs will help sustain inflation near the 2% target. The Services Producer Index rose 3% in September from a year earlier, accelerating from a 2.7% gain in August. Data also showed that prices rose for labor-intensive industries such as hotel and construction work, suggesting that labor shortages continue to push up the costs of hiring staff. The Indian government has reported that the economic growth outlook for the current fiscal year remains strong, supported by robust domestic demand, easing inflation, and recent consumption tax cuts. The report also showed that prices are expected to stay soft in the financial year ending March 31st, helped by a positive outlook for food production despite reduced acreage under oilseeds and cash crops and some weather-related crop losses. Still in the Asian continent, Pakistan's central bank has kept its key interest rates unchanged at 11% for the fourth consecutive meeting, citing stable inflation, improving growth, and limited flood impacts on crops. Bank of Pakistan noted stronger crop yields, industrial recovery, and better high-frequency indicators, revising its fiscal year 2026 GDP growth forecast to an upper end of 3.25 to 4.25%. The bank, however, flagged risks from global commodity volatility, energy price adjustments, and food supply uncertainty. The current account deficit is projected to stay at 0 to 1% of GDP for the financial year 2026, with reserves seen rising at $15.5 billion by December 2025 and $17.8 billion by June 2026. Thailand's Commerce Ministry has reported that exports surged in September, posting their fastest growth in over 3 years and prompting the ministry to raise its 2025 export forecasts. Exports jumped 19% year-on-year, the strongest pace in 42 months, driven by a 35.3% surge in shipments to the United States. The ministry now expects full-year growth of 9.4%, at 10.4%, up from its earlier 2% to 3% forecast. Imports in September increased 17.2%, exceeding the projected 10.6% rise, resulting in a trade surplus of $1.28 billion, well above expectations. Meanwhile, rice exports declined 15.6% year-on-year in September and 23.1% in the January to September period, totaling 5.8 million metric tons. The Gulf Cooperation Council, or the GCC economies, expanded by 3% in real terms during the first quarter of 2025, with nominal GDP reaching $588.1 billion. This figure marks a 5.7% increase compared to the same period last year. The data released by GCC Stat underscores continued economic stability and progress in regional diversification efforts. While the oil sector remained the largest contributor to GDP by 22.9%, manufacturing and wholesale and retail trade followed at 12.7% and 9.6% respectively. Kuwait Fund for Arab Economic Development has signed 2 grant agreements with the UN High Commissioner for Refugees worth a total of $5.7 million as part of Kuwait's continued support for humanitarian efforts in Sudan and Chad. Acting Director General of Kuwait Fund Walid Al-Bahar stated that the first grant, valued at $3.2 million, aims to support Sudanese refugees in eastern Chad. The second grant, worth $2.5 million, seeks to improve education, water and health conditions for displaced persons and host communities in eastern Sudan. Egypt and Italy have signed a cooperation agreement in the field of biogas production. The agreement aims to prepare a comprehensive feasibility study for establishing biogas production units through the treatment of animal and agricultural waste. It forms part of a joint effort to promote the transition to clean energy and achieve sustainable development goals. Oil Minister Karim Badawi highlighted the importance of applying this advanced technology across all Egyptian governorates. Oil Minister Hayyan Abdel-Ghani has announced that Iraq is in negotiations over the size of OPEC quota within its available capacity of 5.5 million barrels per day. Abdel-Ghani said that Iraq had been committed to the current OPEC quota of 4.4 million barrels per day, despite having a bigger production capacity, with total oil exports currently at 3.6 million barrels per day. Abdel-Ghani added that fire that broke out on Sunday in the southern Zubair oil field has not affected exports, and that exports from Iraq's northern Kurdistan region are currently at 195,000 barrels per day and sometimes as high as 200,000 barrels per day. Oil prices recovered firmly from early losses on Monday as optimism over a trade deal between the U.S. and China countered concerns about weak demand for crude. Brent crude futures were down nearly 0.2% at $65.70 a barrel. U.S. West Texas Intermediate crude futures were down 0.2% to $61.41. Both contracts fell around 1% in early trade. Gold prices fell below $4,000 an ounce on Monday as signs of a thaw in the U.S.-China trade tensions reduced some of the bullion safe haven appeal, while market participants awaited the Federal Reserve's interest rate decision this week. Spot gold was down 2.9% at $3,990.89 an ounce. U.S. gold futures for December delivery were down 3.2% at $4,005.20. Additionally, spot silver fell 4.8% to $46.28 an ounce. Platinum eased 1.1% to $1,587.92, and palladium lost 2.6% to $1,391.34. In markets, global stock markets have shown broad gains across all indices during Monday's session. In the U.S., S&P 500 rose 0.89%, the Dow Jones hiked 0.4%, and the Nasdaq increased 1.55%. In Europe, UK's FTSE 100 jumped 0.12%, Germany's DAX expanded 0.14%, and France's CAC 40 grew 0.2%. rather 0.27%. In Asia, Shanghai Composite soared 0.71%, Hang Seng's index surged 1.05%, and Japan's Nikkei climbed 2.46%. That brings us to the end of our economic bulletin. Here's what we've been covering. Trump strikes a deal on trade and critical minerals in Southeast Asia. Italy's tax evasion reaches 102.5 billion euros in 2022. And GCC economies expand by 3% during the first quarter of 2025. This brings us to the end of the Economic Bulletin. Don't forget to follow Qnews on YouTube, Facebook, X, Instagram, and TikTok using the handle Qnews EGY to stay informed. Thank you for watching and stay tuned for more.